2026 launch of the year. Not Bella Bay, not Pinery, not anywhere in Lentor, but in my humble opinion, it is Tengah Garden Residences. Hi everyone, welcome back to the channel. My name is Sherwin, and for the past 1 or 2 years, right, I've been highlighting transformation. And this project, right, fits the description of a project being in the right place and the right time, and of course the right price. And in this video today, I will deep dive into 4 rights and 1 wrong as to how I see this project and why you should be buying or investing in it if you really want to make money and if you believe in my transformation framework. Okay, just some table of content. I will be doing a project overview first, followed by the right entry price, right time to buy, right exit strategy, right rental, and lastly the wrong mindset. Okay, so obviously project is for some and not for some, and I will summarize it at the end of the video. For the project overview, I'll be just going through it very quickly because all these are just facts and you can get it readily from the brochure. If you want it, just let me know. The other thing you have to know that it is launching on 11th of April for 2 weeks for the VIP preview, and if you are keen to visit the show flat, just drop me a DM. Okay, let me start. The developers is Hong Leong Guaco Land and CSC Land, and for those of you that are familiar, for this developer, they do have a loyalty program. So if you used to be an ex-owner, or you bought from them before, or your parents or whoever bought from them before, you would like to find out whether you are eligible, refer to the visual over here, or not. The simpler process will just be to call me and I'll tell you whether you are eligible or not, and you will definitely receive some perks and benefits from the developer itself. Okay, it is located at District 24, 99 years lease, 9 blocks and 16 stories. There's a total of 863 units, so I will consider it to be a mega development, and it's expected to collect their keys or TOP N2029 or early 2030. Okay, the break-even landed cost is 821 PSF PPR, and it's just right beside Hong Kar MRT. And on top of that, or rather you are on top of retail, making it a mixed-use development. Okay, so this is the location of where Tengah Gardens Residences is, but this is not where the show flat is located lah. Show flat should be located somewhere around here. So if you are keen, drop me a DM, I will send you the show flat location and we can have a look together, and hopefully you end up to be my clients. Okay, one thing you have to note is you do not have sea view, but you have some water view or pond view lah. So some of the units do actually have quite unblocked facing and quite nice scenery as well. The other thing to highlight, which I'll go into much more details later, look at this area is Tengah, right? Or rather this area is Tengah. You are situated just right at the edge of Jurong Innovation District and the Jurong Lake District. And the sole purpose of Tengah, in my opinion, is to support the economic activities happening not just here and here, but also downwards towards Tuas area. Okay, so location and connectivity, cannot argue, would be fantastic, because how can you beat having an MRT at your doorsteps, right? And some social infrastructure is there. Primary school coming up, existing primary school, ACS is moving there as well, but sadly not within the 1 km radius, and you have polyclinics and future general hospital. Okay, this is the site plan for the unit. If you notice, one thing you do have to take note, because you are beside MRT, you would inevitably have some track noise as well. But the good thing is you are not facing it directly lah. Okay, it's a side, so it's being cushioned, the noise. Okay, almost north-south orientation with a slight tilt to the east or the west, depending on which facing you buy, but it will be diagonal and you do not have direct west sun. The other thing I like about this project is the units are fairly well spread out, and you do have some units which are the point blocks. Okay, if you remember, there was a point of time where developers start to squeeze a lot of units, right, on one block, right, like maybe 16 units, and it makes the corridor seems very dark during the day lah, and the corridor become very narrow as well. Not a very good feeling, and I believe a lot of developers have improved since the time. Okay, On top of that, the facilities, I don't have to mention because it's a big plot of land. It's a full facilities condo. You have a tennis court here. I think this is a multi-purpose court. I think it can be pickleball or paddle or whatever sports you play lah. Okay. And moving on, we have the price matrix. Something interesting to take note, they have units starting from 1779 PSF, which is a price of an EC, new launch EC. So it is really that cheap. But of course, don't expect all units to be 1779 lah. I think averagely developer will still be pricing it from 2000 to 2002 PSF. Just that if you are that lucky few, you might be able to grab these units, which is 1779 PSF. Okay, so one bedroom, nothing fancy, just 6 units. If you can get it, you get it. If not, you can consider taking the 2 bed 1 bath because it's just 1.1 million starting from. Not that far off from the 1 bedroom. Moving on, they have the 2 bedroom premium, 2 bedroom study, 3 bedroom, 3 bedroom store, 3 bedroom premium, and the 4 bedroom and 4 bedroom premium. Okay, for the 3 bedroom, right, same thing. Revel, which was launched last month, the 3 bedroom is starting from 1.588 million. A new launch condo right beside MRT is also going for 1.5 million. So if you are in that position, what would you choose? Okay, and for the 4 bedroom is 2.288 million, which is one of the lowest price 4 bedroom I have seen in a new launch market in recent years. Of course, I'm expecting developers to launch around this PSF range, 2000 to 2001. So if you have a budget for, let's say, 3 bedroom below 1.8 million, you are pretty safe. I would say you can get quite a number of choice units, and if you're looking for 4 bedroom, averagely you will need around $2.5 million. Okay, I'll not go too much onto floor plan because that's not the main purpose of the video today, but just briefly touch through. If you have seen all the Lentor collection, Waku and Hong Leong, they are very good at utilizing space. Okay, so layout is pretty much similar. You will be guaranteed an efficient usage of space. One thing I would like to highlight is for the 2 bed plus study, usually I prefer the study to be in the bedroom area lah, because to me, I don't feel that the study just right in front of the entrance is very functional, but that is just my personal preference. Okay, and of course they have the 3 bedroom compact, which is a 797 and 818 square feet, and they have the 3 bedroom with bomb shelter as well. So if you are a family with more barang, this is something I can consider. And the biggest unit type they have, of course, is the 4 bedroom at 1259 square feet lah. Okay, 1130 square feet and 1259 square feet. One of the main difference I can say is just the 3rd bathroom. So if your family size is bigger and you have more kids and you do not want a peak hour toilet traffic jam, right, then go for the 1259 square feet if budget permit. Okay, before I move on from the floor plan, just note that Tengah Garden Residences is a harmonized project, and what that means is aircon latch not counted. Just know that. Okay, so moving on to the first right, is this the rack entry price? If you are buying into 2001 PSF on average, for unproven, untested developing estate next to MRT, is 2001 PSF way too high? To answer that question, right, let's look at a comparison, which is Watertown in Punggol, because that's one of our latest township, right? Even though it's quite old already lah. Okay, back in 2011, Watertown was launched with a series of other GLS. And if you can look at all the land cost over here, right, Watertown is the 2nd highest price amongst all the GLS. So its launch price is relatively expensive as well. On top of that, right, there's other new launches that were launched within the year or a year apart that had much lower land cost, almost half of the land cost. And if you can understand why, right, it's because Watertown at that point of time was the first mixed-D surrounded by all the other new launch projects. And not saying that Watertown didn't make money, they actually made quite substantial profit, almost close to 50% from 2011 to 2026. But if you compare to its peers, right, its peers actually all made above 50% profit. Okay, let's compare Watertown to Tengah Garden Residences. Tengah Garden Residences was launched around 2024 to 2025, and amongst all the GLS during that year, right, Tengah Gardens, right, was one of the lowest land bid in the area. So now can you see the contrast? Okay, on top of that, Tengah Gardens Residences is the first new launch in the entire Tengah area, not including executive condo. And if you were to count it, right, it's not just a new launch, it's a new launch right next to MRT. There are 16 other plots of land, as you can see from all my drawings over here in the master plan, but only 3 plots, right, would be with MRT at your doorsteps or at the basement, okay? And Tengah Garden Residences happen to be one of them and the first out of the many. And if you understand how our government work, right, when they sell a plot of land at a certain pricing, the next plot of land they sell, right, will not be below what they have already sold, okay? It will at least be similar or slightly higher. So this is where the real first mover advantage comes in my opinion, as compared to some project in the West where people have been talking about, oh, first mover advantage, first mover advantage. I like, okay, first mover advantage as compared to what, when there's already so many condos in that area. Okay, so for Tengah Gardens Residences, if the future plot of land just appreciate by 3%, this will be the land bidded price all the way to project number 10, not including project number 16. And this will be the break even, and of course with land bid price higher, break even price higher, our developer will of course want to sell even higher as well. Okay, so this is where your built-in profit would be at, and this is the difference between Tengah Garden Residences and Watertown. Watertown was launched when there are other new launches in the vicinity as well, but Tengah Gardens Residences was launched with so many potential upcoming land bid that would push up its pricing. So for the entry price, right, personally Tengah Gardens would be one of the cheapest launch in the area. If you do not buy into that, right, then the next few launches would definitely be higher lah. Just look at Lentor Modern. It is a very good example. Of course, to be fair, we cannot just compare Tengah as a district itself because it's not proven. We have to look at all the new launches and the resale in its neighboring district. Okay, one district will be 23, the other will be 22. And if you look at this map over here, right, all these are the latest launch prices and resale prices for District 22. District 22 is where your second CBD is at. And if you look at Lake Garden Residences and Sora, they are away from the MRT station, about 15 minutes away, and they are already launching around 2001 to 2003 PSF. Okay, and for Jayden, which is, I would say, at the heart of the second CBD launch, average around 2004 PSF, with some units going as high as 2006, 2007 PSF. And if you go to Property Guru nowadays, there are owners asking 2008 to 2009 PSF as well. And for a resale project in the area, J Gateway, which is almost 15 years old, averagely is transacting around 2001 to 2002 PSF. Okay, and moving downwards to the Bukit Panjang and Hillview area, right, you have Arden, which is at a more ulu location at 1007, 1008 PSF. You have Miss, Hill Haven, Nara, and Botany all transacting above 2000 PSS. And lastly, the resale Hillian Residences, right, just right beside Bukit Panjang MRT, is going for an average of 2045 PSF. So if you ask me, is 2000 to 2001 PSF a right entry price, a reasonable entry price for Tengah Garden Residences? The answer is a definite yes. So what is my verdict? Now that we know that it is the right entry price for Tengah Garden Residences, next is Tengah Garden Residences the right time to buy? Okay, right time to buy meaning, is it too early in its transformation? Because for those of you who have seen my previous video, I always say that if you enter too early into a transformation, you might not be reaping the benefits because you are way too early. And if you are entering too late into the transformation, like if you're buying into Punggol now, you might have already missed the boat. So to understand which stage of transformation Tengah is at, right, let's look at the Punggol experience. Once again, I'm pulling up Punggol as a reference because Punggol is really the last township and it took a hell lot of time to develop. As you can see from the chart over here, Northeast Line was built in the early 2000s, but the business hub, right, only materialized about 21 years later. So depending on which timeline you are buying in, if you are buying in too early, you might have to wait quite long to see that substantial profit. Okay, as compared to the Tengah infrastructure timeline, where are we at now? We're at 2026. But in 2024, right, they already have bus interchange open. They have Plantation Plaza where they have a lots of shops, and they have forest corridors and park operational. Okay, so 2026, there's Tengah Polyclinic, there's Park Point, there is primary school coming in as well. So if you're buying in 2026, and Tengah Garden Residences, right, is expected to collect keys, right, in 2029, right, by then, right, all your MRT and connectivity regional line would be ready. If you can notice, right, I'm not even talking about the business hubs here, because the business hub has already existed, which is your Jurong Innovation District and your Jurong Lake District. Not only it is in existence, it is also rapidly building on its foundation. So more jobs will be created and more demand, right, would be in the area. Okay, and if you look at this map of the Western transformation, right, there's so many things happening around, not just the Jurong Lake District and Jurong Innovation District. You have the Tuas Port and you have the One North transformation as well. And all this is expected to create, right, 300,000 new jobs. And this brings me back to my point, right? Why is there a need, or why our government is building a township, right, specifically, right, in Tengah itself? Because they can build in so many other areas, like Sembawang, Changi or whatsoever. But why do they need to build a new township here? Because this would be the residential anchor and support for whatever business activity that is going to happen for the years to come. Okay, so on top of that, the business support, we also have to understand connectivity, and what links all the business district and the residential area together is our Jurong Region 9. And this is where Tengah Garden Residences is located, which will be ready by the time you collect the keys to your unit here. And it brings you to Boon Lay, which is at Jurong West, and our second CBD, which is at Jurong East. So if we do a side-by-side comparison in terms of infrastructure readiness, right, by 2029 when Tengah TOP, the polyclinic would be ready by 3 years, okay? But for Punggol wise, it wasn't ready for 14 years. Shopping and retail, it will be ready 5 years before TOP. MRT station 1 year before TOP. Bus interchange 5 years before TOP. Schools will be up and running for the residents in the area, and the business and employment hub, right, is already established and still growing on top of it. So these are the side-by-side comparisons. So in terms of whether it is the right time to buy, it is the right time to enter into Tengah Gardens Residences, because by the time it TOP in 2029 or 2030, you'll be stepping into functioning healthcare, retail, schools, transport, and a few other major employment hubs. After analyzing the first two, right, we are moving on to the third, right, which is, do you have the right exit strategy for Tengah Gardens Residences? And the answer for this lies in the numbers, okay? The first one which we will be talking about would be the upgrader pipeline. If you look at Tengah Gardens itself, right, it's actually pretty self-sustaining, because there's 30,000 HDB that would be built in the area. And by the time Tengah Garden Residences TOP, some of the units over here would have already MOP, forming your first batch of upgraders. And we all know, right, in recent years with the high ABSD, what drives property prices up and property transactions are mainly HDB upgraders. So these are the numbers which you would be expecting. Okay, so number one is the upgrader. Next would be the surrounding demand. You have to understand Tengah is not an isolated township. Just like Queenstown, right? People stay in Queenstown might want to move to Clementi. People stay in Queenstown might want to move to Redhill and Tiong Bahru, because it's not too far off from where they stay, and they're still rather familiar with the area. So for Tengah itself, right, the mature estate surrounding it is like Choa Chu Kang, Bukit Batok, and Jurong East. But because it's an older township, mature township, some people prefer to move to a more vibrant and new area. And if you look at these three areas plus Tengah combined, right, the total upgrader pool will bring you up to around 137,000 HDB household, which Tengah Gardens Residences can tap into. And mind you, for some of the HDBs in this area, like for example with Bukit Batok, if you understand, if I'm not wrong, the name of the HDB cluster is called Sky Peak, just opposite the driving center. The 5-room is going about 1 million or slightly above $1 million already. So just imagine the amount of equity all these owners are sitting on. Okay, so this is just some of the buyer's profile which I feel people will be buying into. Side question. One thing I always ask my clients is when they are looking at investment, right? I ask them, would you prefer to invest in an area where there's a lot of young people, or would you prefer to invest in a place where there's a lot of old people? And sometimes they get confused with this question, but my whole point to drive across to them, right, is if I have a chance, right, I always want to invest in a place where there are more young people in the area, because these are the people that have a genuine need to upgrade and buy bigger units. Okay, hence you see areas like Punggol, why is it transforming so fast, or why did it develop and the property prices increase so much in the past 20 years, making it one of the hottest districts? Because the people over there keep moving houses, and every time there's a lot of transaction volume, prices generally increase as well. But if you buy into a mature area where the people are generally older, they do move, but their shift is not as frequent, and even if they do shift, it would be right sizing rather than upgrading. Okay, and after the surrounding resale demand, third would be the employment driven demand, which highlights again the importance of Tengah being within, right, Jurong Lake District and Jurong Innovation District, not including Tuas yet and One North, because from the earlier slides which we have seen, we all know that these 4 economic areas, right, will bring in about 300,000 new jobs. Okay, and with new jobs, it will bring in higher tenant pool and more people wanting to stay close to where they work. Okay, so even though Singapore is small, generally we are still lazy lah. Or maybe you're not lazy, but I am lazy. I want to stay near to my workplace. Okay, so to bring this all together, to answer whether you have a strong exit strategy, right, it is without a doubt. It is just at what price would you be able to fully capitalize whatever you are buying into Tengah Gardens Residences today. Because you do have to remember this, Tengah Garden Residences in the plot of upcoming land bid, right, is at the base. Whichever land sales that is going to be sold in the future would be the ceiling. And we all know, right, the supply pipeline is finite. So the developer know one thing, the demand regardless, right, will always be there, because the demand is structural. The demand is created by our government. And with this influx of demand coming in and such limited supply, right, everything after Tengah Gardens Residences, right, will just raise the ceiling to how much higher you can sell for this project itself. So for Tengah Gardens Residences, it's not so much of a quick flip. Rather, how long can you hold till all the land, right, is being sold, or at least sold to a certain level where you think that, oh, it's the right time for me to cash out and move on. And even if you don't want to and you want to continue to rent, the rental there would be very, very strong, which I'm going to show you later. Okay, so after talking about the first 3 right, the last right will be the right rental. Because for me, I feel Tengah is not something you buy, and if you want to capitalize it to its fullest potential, you flip it within the next 3 to 4 years. You must at least be holding it for 5 to 8 years for it to realize its fullest potential. Then the key question for investor that is buying into the area, right, is can Tengah generate enough rental income to service the existing mortgage? And the short answer is, given the surrounding rental market, the employment hub, and Tengah Garden Residences' unique selling point, which is right beside MRT with a fantastic view, right, the answer is yes. But I cannot just use my mouth to say, I need to show you some visuals. This is for District 22 for condo near MRT station. Centris rental, highlighted over here. Lakeview rental is highlighted over here. 1 bedroom 3001 to 3003, 2 bedroom 4001 to 4003, all the way to the 4 bedroom 7000, 8005 lah. Okay, so on and so forth. You can see it for yourself. And this is for District 23 for condos near MRT. The Jade is a very old project beside Westmore. For those of you who don't know what Westmore is just a very old mall. Jade, the 2 bedroom is commanding up to 4,000, 3 bedroom is 5,004, and the 4 bedroom is up to $6,000. Similarly for Hillian as well. But what I want to show you over here, right, is Tengah Garden Residences sit between District 22 and 23, and with its superior MRT connectivity to all the business hub, right? The conservative benchmark for just the 1 and 2 bedroom, you'll be looking at $3,000 to $4,000 per month. Okay, and one more thing I would have to highlight. Let's look at this chart over here. This is the average rental PSF growth, right, for the past 10 years. OCR average, right, grew by 66%. But if you look at District 22, which is the Jurong and Lakeside area, it grew by 74%. And for Bukit Panjang and Bukit Batok area, it grew by 77%. Such ulu place, but the growth is more than the average outside core central region growth. Okay, just to simplify for those who do not understand what is outside core central region, it means that it's just not in the central region and the city fringe region. So areas like Bukit Batok, Jurong, Woodlands, they are considered outside core central region. And these two districts are outperforming the rest of the district because of the western region transformation. Okay, so this is one of the things which I have to highlight on the rental advantage as well, the rental strategy. For Tengah Garden Residences as of today, right, if you include in the executive condo, do take note that executive condo, they cannot rent until its MOP, which is 5 years later. Lumina Grand, Copen Grand, Auto Place EC has no 1 bedroom at all. And for 2 bedroom, there's only 11 units. Generally, I will ask people to avoid buying 1 and 2 bedroom. But for Tengah Garden Residences, if you have a chance, just go for it. Just go for it. The rental demand here will be huge because of the limited supply and the influx of demand. Okay, so gross rental yield for 1 bedroom would be 3.7 to 4.8%. For 3 bedroom would be around 3%. It has a lower entry price, deeper tenant pool, and lower vacancy risk. Not just because of the high demand, but because of the low supply here as well. Okay, so further analysis, because we all love number. Can rental cover mortgage? Answer is yes. For 2 bedroom scenario, if you buy at 1.1 million, 75% loan, I take the stress test rate of 4%, but currently interest is hovering around 1.5% to 1.8% now. Okay, so your monthly mortgage would be lower around the $3,400 to $3,500, and the estimated income for $4,200 for your 2 bedroom. Of course, we are expecting it to be higher because it's beside MRT and it's brand new. You will have a monthly positive cash flow of $225 and a gross rental yield of 4.5%. And if you are the lucky 6 that managed to get the 1 bedroom and 980,000, monthly mortgage at $3,500, estimated rental income $3,000 to $3,500, your cash flow will be a near break even lah. Okay, so the bottom line is, even at conservative rental estimate, you can easily cover the mortgage, and even if you do need to top up, it will only be at a difference of $100 to $200. Okay, and this is with the assumption of the rental benchmark for District 22-23 at a 4% interest rate and 30 years loan tenure. Okay, so to end off this video, I'll end it off with the one wrong. Okay, what's the one wrong? The one wrong is wrong mindset and wrong holding period. Even though as much as I believe this is the launch of the year, I do not believe that it is for everyone. So who should not be buying? The first group of people that should not be buying is if you want to buy into a mature estate where everything is ready and you have little to no construction near you, okay? Because as you can see, it being the first, there's still so many plots of land that is going to be launched, and everywhere you drive in the next 4 to 5 or even 10 years, you will see things developing and it will be slightly dusty or slightly noisy. So if you cannot tahan, then this area is definitely not for you. Secondly, if you are an investor looking for a quick flip, this might not be for you as well. Not saying that you are not able to make money if you sell in 4 or 5 years time. It's just that you might not be able to capitalize on its full potential. Why? 4 points. HDB upgrader wave hasn't peaked yet. Just like I mentioned about HDB upgrader, in Tengah itself there's 30,000 HDB, but by 2029 or 2030, there are only about 7 to 8,000 HDB that's MOP. And this 7 to 8,000 only forms 20% of the entire 30,000. Okay, so you can see where the point that I'm trying to build. The upgrader demand is still building. And if you can allow and give it time, right, then you'll be able to make more money. Okay. Secondly is JLD, JID, TOAS transformation takes time. Even though we know that it is massive and it is already in progress, but it's still not at its fullest potential. Okay. Third will be that the infrastructure is still developing. For this district to fully mature and take shape, I think it will be the early 2030s and 2035. And lastly, of course, would be your resale liquidity. It takes time to slowly build as well, because if there's not much transaction in the area, not much volume, the price generally do not shoot up as fast. So the bottom line for Tengah Garden Residences is this: if your holding period you are looking at is less than 5 years, then this is not the right project for you. Go and search for somewhere else where you can flip in the next 3 to 4 years and can guarantee you a higher profit margin. This project requires a certain level of patience. Okay, so this is the deal you are making and accepting. The trade-off is you accept early inconvenience for the price that you are paying or not paying. Because if Tengah is fully mature and right beside the MRT station, right, the price that you will be paying would be same as Parktown Residences, which is at 2005-2006 PSF, Pinery, which is at 2005-2006 PSF, Jayden, which is at close to 2004 PSF, or even for a mature estate not near MRT station, Sora is almost going at 2003 PSF already. Okay, so this 400 and 600 PSF discount is your compensation for buying into a developing area. And as the town mature, right, the gaps narrow, and that is where your upside lives. Okay, so just understand that every mature estate was once developing. Early buyers in Punggol, Sengkang, Tampines, they capture the biggest gain, and Tengah is that opportunity today. It's just whether you can live off with that trade-off or not. To summarize, this is my 4 rights and 1 wrong. Know your own position, because I have clients that really can't live with that inconvenience. Then I will tell them, okay, look at other properties which might be more suitable for your situation or your family situation right now. Okay, the first right will be the right entry price. Then second right is right time to buy, right exit, right rental, and at the end of the day, have the wrong mindset. Or if you have the wrong mindset, or if you are in the wrong position, do not buy Tengah Residences. If not, I'll end off this video by calling you guys out. If you are looking to make the most amount of money in property, Tengah Garden Residences is one of the not to be missed launch of the year. And if you would like to visit the show flat, it is launching on the 11th of April. And do reach out to me for me to understand your needs and family objective more before you proceed to make any decision.